Hello guys, welcome back to another stock market update. I wanted to start off this video by showing you a post that was left on my last video. Now, if you remember in my last video, I was showing you the reasons that I thought the market was showing weakness. In that video, I pointed out that I was purchasing UVXY calls and I thought the market would see a pullback in the near term. And sure enough, we saw today the largest pullback since June. The UVXY calls I bought are up well over 100%, very close to 300 and gaining, and they have time. They were September 18th, so there's plenty of time on them. So if you were able to follow me on that trade, you made quite a bit of money. You have to be careful when the market gets too frothy or too overbought and gets too high, because you will see people like this that are way overly bullish. When you get comments like this that, hey, stocks can never go down, when your next door neighbor who's a 21-year-old communications major at community college down the road is purchasing Tesla stock, that is time to be very cautious. All those things were happening over the past few weeks, and I mean, they were all signs that we were due for a significant pullback, and here we are today. This right here is what can happen when people get too complacent. The signs were all there. We had a 3.5% drop in the S&P and a 5% drop in the NASDAQ in one day. Biggest drop since back here. And what's unfortunate for people that lost money is that all the signs that a major sell-off was coming was right sitting in everyone's face. There was no secret. The VIX was climbing up. Again, RSI was insane. We had a huge run up with little to no consolidation into this huge resistance line, which, by the way, this resistance line has just been, this was here before price got here. Look how price came up, touched it, and rejected right from it. This trend line has been solid so far. I think this is the last time that trend line is going to reject price like this. I think we see a pullback, maybe trade sideways for a bit, and then we're going to break it. But this trend line was really solid. And the way I got this trend line was part of a pitchfork. If I zoom out, you can see it. We have this huge pitchfork over the long term that I set up. And I mean, it cannot work more perfectly than that. We rejected right from it like we did back in February. And we are getting the pullback that this market needs. Levels that I'm watching, I think the market wants 3,400. This right here is 3,400. 3,400 is the last time we saw some solid sideways consolidation. Also, if you look on the volume profile, there is a bigger volume shelf when you get to that level. And then the third thing, the reason I like 3,400 for us to bounce from is because if you throw on the Fibonacci retracement, now our wave count, so this was wave 1, this was wave 2, this whole thing right here was wave 3, and we're in the process of pulling back on a wave 4. In wave 4, you usually get a 382 retracement. So if we throw on the Fibonacci retracement, this 3,400 level is just about where the 382 retracement is. Maybe we get a little bit below 3,400. We get in this area. This is still the consolidation area. Remember, support is a mattress. It's not a board. So we could sink into this right below this 3,400 area, absorb some buy orders, and then be off to the races from there. If we broke this 3,400 area, I think the next area of support is this pink line here, 3,284. I think if we do get to 3,284, then the 50-day moving average, this purple line, would also, there'd be a confluence right there of support between 3,284 and the 50-day moving average. After that, next area of support is 3,205. After that, if that area were to break, then it'd be, oh crap, because that shouldn't break. But I do think we either get a bounce here at 3,400 or here at 3,284. Another possibility, which I'm kind of forming in my brain as I talk about this, is we could see a drop to 3,400. We could see a short-term bounce, and then we could see a failure down to 3,284. These two levels I'm really confident in. If we don't bounce and head higher from here, we'll bounce from here and head higher. So it's just kind of, if we did drop to that pink line, that would be, this pink line right here is a perfect 50% retracement. So both of these levels are really solid and could be, either one of them's good. So I love the confluence I'm seeing here at the 50%. And there is a big volume node down here. So we're just gonna have to wait and see. So what I would really like to see, and what I think we could get out of this, is we come down to 3,400, we get a bounce, we roll over. So we're forming our A wave right here. Remember, because we're correcting, this is wave 4. We're forming our A wave. We get our bounce at 3,400 to make our B wave. And then our final C wave takes us lower down to 3,281. I'm thinking that is my prediction for the way this wave 4 is going to play out. It's a little risky because this pullback down to this pink line is bigger than you would like for a wave 4, but it's still valid. One of the rules of Elliott wave is that wave 4 cannot get into wave 2. In wave 2, for that to happen, it'd have to come down here. So there's still enough room for that to take place. One thing I want you to notice before I am done for today is the middle of this pitchfork has been support and acted as resistance at times. Here it's been resistance, here it was resistance, here it was kind of support for a while. So the middle of this pitchfork could be where the market comes in and settles at, which would again have confluence with not only the 50-day moving average, but also this pink line here, which is a pretty solid level. So yeah, we're just gonna have to sit back and see what the market does. So thank you guys so much for watching. I appreciate you. Make sure you like, subscribe, comment on the video. I promise I won't roast you if you comment on the video. And yeah, just thank you so much for all your support. Have a great trading week. Bye.